if Trump wins that election, obviously those two people will have less influence. Elizabeth Warren will still be in the Congress, but Gary Gensler will no longer be the SEC chairman. So there'll be a new group of elites that are running the SEC. So the question is, though, will that be better or not? I don't honestly know the answer because Donald Trump has spoken very negatively about Bitcoin. Now, Vivek Ramaswamy has convinced Donald Trump that he should never have a central bank digital currency. So Trump is behind that now. I think Trump also made some money on these NFTs. Maybe that's going to open his mind to the world of digital assets and Web3. But I don't think 80-year-old Donald Trump, 75-year-old Elizabeth Warren, 80-year-old Joe Biden are the right people to make regulatory decisions about this asset class. So I don't necessarily think a Republican win is going to be better. It may end up being worse in some ways. So we'll have to see, as it relates to crypto in general. Now, what's really interesting is yesterday Gensler came out and said, well, despite the fact that we approved against my greater wishes, we approved the ETF, I am now letting you know that may be the last one. I'm not going to approve the Ethereum ETF. And, look, there'll be lawsuits about the Ethereum ETF, but I'll just give you his brand of thinking. If he approves the ETF, then every one of those pillows behind you is going to get an ETF. I don't think he wants that. We can argue about it, and he could lose the court cases, but that doesn't mean he doesn't have tricks up his sleeve to delay this stuff,
In 2024, we have a US election, one of the biggest catalysts for financial markets. But who would be better for crypto, Donald Trump or Joe Biden? Recently, Anthony Scaramucci, founder of Skybridge Capital, spoke about the potential impact of Biden and Trump on the crypto landscape. He also broke down Jamie Dimon's recent comments on Bitcoin, breaking down the significant impact of the Bitcoin spot ETFs and the hurdles of an Ethereum ETF launch later in the year. Additionally, he gave insights into the Federal Reserve's role, interest rates, and the broader market outlook. Make sure to stick around to the end of the video where Anthony Scaramucci reveals why he believes on a long enough timeline Bitcoin is inevitable. Also guys, only a small percentage of my viewers are actually subscribed. If you enjoy staying up to date with finance content, consider subscribing or liking the video. It's free and can always change your mind. Now here's why Anthony Scaramucci thinks 2024 will be a massive year for Bitcoin.
Let me set the scene for you though. In 2023, when I got back from Davos, I was interviewed by Bill Cohen from Puck. He said, what'd you learn in Davos? I said, well, Bitcoin's going up. And he said, what do you mean by that? I said, well, I didn't meet a person at Davos. I didn't meet a member of the white badge delegation. Those are the people that, are the diplomats and the heads of state and policymakers and central bankers and CEOs of large companies. I didn't meet one of those people that liked Bitcoin or thought Bitcoin had any legs. In fact, many of those people were telling me that Bitcoin was a dead asset and it was a road to nowhere and soon to be a ghost chain. And so what I find about Davos is the collective wisdom of the elites, because they're trying to impress each other. And, that was the trend at the time. They all hopped out on that and they got it wrong. And so this year there was a muted situation in Davos. So meaning if you talk to somebody and say, oh, I hear Bitcoin had a great year, but really who cares? It's an insignificant asset and the blockchain itself is insignificant and Web3 is not going anywhere and we're traditional finance people. And then of course, Jamie Dimon gave a pretty high profile interview on CNBC where he routed Bitcoin and other blockchain oriented assets. So I take all of that as extremely positive. And so that's just my view. I feel like we're gonna have another great year in Bitcoin, not just because of the ETF and the halving, but because we still have fence sitters and naysayers. And the way markets work, Tone, is that you got fence sitters and naysayers. As they come off the fence and they stop naysaying, the price goes up. You have no fence sitters and you have no naysayers, and you and I gotta be worried. We gotta talk about that being a top. He's one of the smartest people in finance. So, but he's got a vested interest in what he's doing. And he's also got a way of thinking that has made him and his family over $1 billion. He's arguably one of the most successful financial services executives in U.S. economic history, sitting on top of largest, most successful bank in the history of the United States. So I have an enormous amount of respect for him. But what I do find with people like Jamie of his vintage, of his era, and I think Jamie's 67 now, if you don't do the homework on Bitcoin and you're opining on it, you're probably opining negatively because of your life experience. But if you do the homework, and contemporaries of Jamie would include people like Stan Druckenmiller, Paul Tudor Jones, Ray Dalio. Those men, they did the homework on Bitcoin and they drew a different conclusion. And I would say something to you that I would hope your viewers and listeners would contemplate. The more homework you do on Bitcoin, the more you go towards Bitcoin. I sort of feel like Bitcoin research and Bitcoin due diligence is a one-way ticket towards Bitcoin. I have yet to find somebody that says, I read everything, I got steeped in the understanding of the code, I got steeped in the understanding of the network and the decentralized nature of the network and the fact that it hasn't been hacked and has been up and running for 14 years. I did all the work and I hate Bitcoin. I have yet to hear anybody do that. So, we'll get there. Jamie's an example of somebody that probably would need to do the homework. Larry Fink, on the other hand, 2 years ago, I met with Larry in Abu Dhabi and we were in the lobby of the Four Seasons Hotel together. He was very negative on Bitcoin. And he said he was positive on stable coins. He had just made an investment in Circle, but he was very, very negative on Bitcoin. And here we are 2 years later, he's all in and he's talking about the tokenization of assets, the digitization of assets, and he's trying to make IBIT, which is the BlackRock ETF, the largest Bitcoin ETF. In fact, if you took the 11 Bitcoin ETFs, this has been the most successful launch in terms of aggregate dollars in ETF history. So I admire Larry. Smart people, when the facts change or they've been influenced by greater knowledge, they change their decisions. You don't have to stay in a certain realm if that realm is no longer accurate. I can't tell you how many times in my life I've gotten something wrong, and what's the move? You got to make an adaptation and you have to admit that you're wrong and go in a different direction. So I admire Larry Fink for that. That Bitcoin ETF should have been approved in 2014, and it would have saved retail investors. It created the Grayscale debacle with the 2% fees and the discount and the surplus and all that stuff that happened to the Grayscale Bitcoin trust because it wasn't an ETF. All of that stuff could have been avoided, but we're not in it anymore for protecting the investor. We're not in it anymore for advancing financial innovation. We're in it for politics. And that really sucks for the country because I have met with people from around the world, particularly those in the UAE. I've met with regulators and the regulators say, our politicians and our ruler is agnostic to our regulatory process. If it's good for the country and it's safe and sound and it's transparent, we're good. There's nobody calling, jawboning, I woke up this morning, don't like crypto, let's ban Bitcoin in a country that has 22% of the world's GDP. I obviously think Coinbase is going to be fine. I think that they are such a big part of the crypto ecosystem and all of these ETFs are transacting with Coinbase. Coinbase has an interesting lawsuit going on right now vis-a-vis the SEC. It sounds like the judge is very well prepared, asking super smart questions related to that lawsuit. It could come to pass, Tony, where the SEC loses another case. Could you imagine that? I mean, they would have lost the Ripple case. They would have lost the Grayscale case. They'd lose the Coinbase case. I think at that point, it's a little embarrassing for them in terms of the way they're administrating the laws. I think it's prima facie they're acting as politicians and they're being politically influenced more than they are adhering to or following the law. But when you talk about grown-ups in the room, Coinbase will have its market share. JP Morgan, despite the sentiments shared by Jamie Dimon, will have its market share. Goldman has gotten into the mix. And yes, I think that the asset class is growing up. I don't think some of the larger baby companies, to use your analogy, are going to get hurt that badly because I just think it's just going to be overall growth in the ecosystem. But it's not going to surprise me if we're sitting here a year from now and the biggest brokerage firms have Bitcoin available as an investment. The wirehouses have approved it for portfolios. You could have somebody like BlackRock in their total return portfolio. It's a $2 trillion portfolio. They say, okay, we want a 1% exposure. It's $200 billion in Bitcoin. Just think of the magnitude of that. I think you can't see the future, but if the future is exponential, like you and I both believe, then it's very bright. The question is, what's going to happen near term? I don't know the answer to that, but are we sitting here at an all-time high between now and the end of the year? We have 11 and a half months to go, and we have a big halving cycle taking place in April. Could Bitcoin get through the $69,000 level by the end of the year? I believe it will. Selling will have abated from Grayscale, and the machines of Wall Street will be selling this idea to their clients. It's an election year. And so I'll say a couple of things. The Stock Trader Almanac, 125 years of election observation, 85% of the time the market goes up in an election year. I wouldn't bet against that trend. Secondarily, the Fed has said that they're more or less done raising rates, and it being an election year, and I know they try to be apolitical, they're sort of political, they'll probably start cutting rates. The question is, how much will they cut and when? And I think when they say higher longer, I just think it's going to be lower longer. And what do I mean by that? Probably don't cut rates until the second half of the year, and then they cut them pretty quickly. If the Fed cuts rates and the market doesn't move a lot, it won't surprise me because it's been anticipatory. Same way Bitcoin went up a lot into the ETF news. Once it got announced, it traded a little bit sloppily. But I do believe that interest rates are the physical gravity of financial assets. You lower rates, you're going to increase the value of those assets. It's just the way it works. So lower rates will mean a higher Bitcoin. Lower rates will mean a higher Ethereum. And so it'll be generally a good thing. Will it happen instantaneously? No. But will it happen? Sure. Remember, these things are what Buffett once said: the markets are a voting machine or a popularity contest in the short term, but they're a weighing machine over long periods of time where they weigh the fundamentals of something. And so you could be sitting here with lower interest rates and Bitcoin's up over 100,000. Not impossible.
So there's Anthony Scaramucci giving us the lowdown on Bitcoin and politics. As we gear up for the 2024 election, he simplifies the debate on whether Trump or Biden is better for Bitcoin. He also shared his outlook on cryptocurrency after his experiences at the World Economic Forum in Davos, providing insights into Jamie Dimon's stance, the impact of the Bitcoin spot ETF launch, and broader market dynamics. His breakdown of his complete crypto thesis, coupled with his insights into the 2024 elections, offers valuable lessons and strategies for anyone looking to navigate the complex waters of crypto investment. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 40,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.